Hi, I'm Satyam. Today, the Indian stock markets closed on a positive note, reversing a three-session losing streak, as both the BSE Sensex and Nifty 50 ended the day with notable gains. The BSE Sensex closed at 81,559.54, registering a gain of 375.61 points, or 0.46%. The Nifty 50 followed suit, closing at 24,936.40, up by 84.25 points, or 0.34%. This positive movement in the market reflects a renewed sense of optimism among investors, particularly in the consumer goods sector, which led the market rally. Throughout the session, the markets remained choppy, oscillating between gains and losses, but ultimately, both indices managed to close in positive territory. The key driver of today's gains was the significant performance of consumer goods stocks, which surged as traders showed optimism about a potential demand revival. This expectation stems from a stable monsoon, which historically plays a critical role in the Indian economy, especially in rural areas where agricultural productivity and income levels are heavily dependent on monsoon rainfall. A stable monsoon not only boosts agricultural output, but also leads to increased consumer spending in rural areas, benefiting the fast-moving consumer goods sector. The consumer index rose by an impressive 2.04%, reaching a record high and continuing its outperformance relative to the broader market indices. Since the beginning of July, the FMCG index has gained a remarkable 13.6%, far outpacing the Nifty 50, which has risen by only 3.9% over the same period. This underscores the strength of consumer stocks in the current market environment, driven by expectations of a rural demand recovery and the likelihood of price hikes later in the year. As consumer sentiment improves, companies in this sector stand to benefit from increased sales and profitability. One of the standout performers today was the high-weightage financial sector, which rose by about 0.8%, contributing significantly to the market's overall gains. Financials have a strong influence on both the Sensex and Nifty 50 due to their large market capitalization, and their positive performance today helped lift the benchmarks into positive territory. The financial sector's gains are an encouraging sign, indicating that investors are still bullish on banking and financial services stocks, despite the broader market's recent volatility. However, it is important to note that not all sectors shared in today's market rally. In fact, all other sectors logged losses, except for consumer goods and financials. This divergence in sectoral performance highlights the selective nature of today's gains, with traders focusing primarily on sectors that are perceived to have strong growth potential in the near term. The overall market sentiment remains cautious, with global factors weighing on investor confidence. Asian markets, for example, were largely lower today due to concerns over a potential growth slowdown in the U.S. and China, two of the world's largest economies. Economic data from the U.S. and China have raised concerns about the strength of their respective recoveries, leading to uncertainty in global markets. These concerns have trickled down to Indian markets as well, contributing to the choppy trading session we witnessed today. Despite these global headwinds, Indian markets managed to end the day in positive territory, supported by domestic factors such as the strong performance of consumer goods and financials. In terms of institutional activity, both domestic institutional investors, DIIs, and foreign institutional investors, FIs, were net buyers today, adding further support to the market's recovery. DIIs bought shares worth 1,757.02 Indian rupees crores, while FIs bought shares worth 1,176.55 Indian rupees crores. This inflow of capital from both domestic and foreign investors is a positive sign, indicating that market participants are confident in the long-term growth prospects of Indian equities. The signs of recovery in the rural economy, driven by a stable monsoon, have been a key factor in attracting investor interest in consumer stocks. A healthy monsoon season leads to increased disposable income in rural areas, which in turn boosts demand for consumer goods. Additionally, there is a growing expectation that companies in the FMCG sector may implement price hikes later in the year, further supporting their earnings growth. This combination of factors has made consumer goods stocks particularly attractive to investors, as evidenced by their strong performance in recent weeks. While today's market action was driven by gains in select sectors, the broader market still faces challenges. Global uncertainties, particularly around the economic outlook for the U.S. and China, continue to weigh on investor sentiment. Asian shares were lower today due to concerns about the pace of recovery in these major economies, and any further deterioration in their economic conditions could have a ripple effect on global markets, including India. Nonetheless, the Indian market's ability to snap its three-session losing streak and end the day higher, despite these global concerns, is a testament to its resilience. Investors remain cautiously optimistic, buoyed by strong domestic factors such as a stable monsoon, improving rural demand, and continued institutional inflows. As we look ahead, the performance of key sectors like consumer goods and financials will likely play a pivotal role in determining the market's direction in the coming weeks. In conclusion, today's market rally, led by consumer goods and financials, provides a glimmer of hope for investors after a challenging few sessions. With the monsoon season providing a boost to rural demand and institutional investors continuing to buy into Indian equities, the market appears well-positioned for further gains. However, caution is warranted given the ongoing uncertainties in the global economy. As always, staying informed and vigilant will be key to navigating the markets in these unpredictable times. This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, please like, share, and subscribe. Thank you.